Hi there, this is Tom Lee. 2025 has been a very turbulent year so far, and I think what's been notable is that there has been what I would call panic Mondays. Last week was the market's reaction to DeepSeek R1, and that was a fire-ready aim moment. And this past Monday was the drug war tariffs that were levied on China, Canada, and Mexico. I think it's been interesting how the markets handled this. On those panic Mondays, there was an initial drop, but then as we move through the week, stocks have recovered. And in fact, if you look at the past 2 weeks or so, the market is roughly flat. And I think that that's a good sign for what I would say it represents very resilient market. Also notable this week, we got some news that strengthened our call for a PMI recovery. That is one of our shorter term themes for our granny shots. We still have four fundamental themes, but the three shorter term themes are style tilt, seasonality, and PMI recovery. The January ISM manufacturing was released this past week. Now, what's been notable is the NFIB Small Business Optimism Index has been below 100, which is sort of essentially contraction for about 3 years, but last month it broke above 100 for the first time. And it looks like the January ISM finally managed to move above 50, and it has been below 50 or essentially contractionary conditions for 26 months. What may surprise you is that 26 months is actually the longest period of time ever in the history of the ISM survey. The second longest period is the 25 months from 1989 to 1991. And even during the depths of the GFC or the financial crisis, the ISM was only below 50 for 18 months. Well, what does this mean? Well, it shows you business confidence is recovering this year, which gives a lot of credence to why we have this theme about the PMI recovery. And I think this chart should give you some insights about better earnings dispersion. This is comparing the ISM, which is in gray, and the blue is the Russell 2000 earnings growth. But here's the catch. We advanced the ISM by 4 months. In other words, treating it as a leading indicator. And as you can see, it's done a very good job of catching the inflection points for small cap earnings growth. So again, I think that really does reinforce the idea that earnings is accelerating for the market this year, and thus the importance of focusing on that PMI recovery theme. And speaking of earnings, this happens to be the busiest week for S&P 500 earnings. It's technically week 9, but there are 131 companies reporting. But I think one of the things we're all going to focus on is really cumulative big tech CapEx spend. On the right side, you could see that the street's looking for roughly $213 billion of spending this year. And that's a big ramp up. I mean, just 2 years ago, it was 118 billion. So it's more than doubled. As of Tuesday's close, Alphabet and AMD both reported the stocks are down after hours, but I wanted to flag something. Amazon may be down because of their revenue guidance, but take a look at this CapEx guidance, 75 billion for 2025. That means that if you look at what the street was previously estimating, they were looking for roughly 64 billion of CapEx in 2025, and now it's closer to 75 billion. That's a big increase. And of course, that's really good for the downstream companies. For the past week, granny shots had declined 1.7% on a market price basis, 1.68% on an NAV basis. The S&P was only down 0.99%. So granny shots had a relative negative underperformance of roughly 70 basis points. Now, behind all that performance differential is listed here based on 1 week change. And the top 5 contributors to performance were Axon, Meta, CrowdStrike, Apple, and Costco. You might recall in the past week, Meta and Apple reported. And the bottom 5 performers are Caterpillar, Arista Networks, Eaton Corp, Quanta Services, and NVIDIA. And NVIDIA got particularly hard hit because of DeepSeek R1. Year to date, granny shots is up 4.36% on a market price basis, 4.31% on an NAV basis. That compares to 2.78% for the S&P 500, which means Granny Shots is outperforming by roughly 150 basis points. Now, if you're not too familiar with what Granny Shots are, ticker GRNY, it's named after. Thank you for listening, and I'll speak to you soon.